Benjamin Franklin was born on January 17, 1706, in Boston, Massachusetts, to a modest family of 17 children. His father, Josiah Franklin, was a candle maker, and his mother, Abia Folger, instilled in him the values of diligence, practicality, and resourcefulness from a young age. Life in early 18th century Boston was not easy. Families relied heavily on trade, manual labor, and ingenuity to survive. Young Benjamin, known for his curious mind and quick wit, displayed early signs of intellectual hunger. He devoured books, learning not only the classics but also practical knowledge about commerce, science, and the ways of the world. Though formal schooling ended for him at the age of 10, his self-education became the foundation for a lifetime of insight into human behavior, money, and economic systems. Franklin's first significant exposure to the practicalities of trade and business came during his apprenticeship at his brother James's printing shop. At 12, he began learning the trade, understanding not just how to set type and print pages, but also the economics of printing as a business. He observed the costs of materials, the management of time and labor, and the subtle art of persuading customers to buy printed works. This environment was more than just a training in printing. It was a hands-on education in commerce. Benjamin learned that success in business required not only skill but also strategy, foresight, and careful handling of resources. The lessons of industry and thrift he absorbed in those early years would later form the backbone of his financial philosophy. Colonial America presented a unique financial landscape. Currency was scarce, trade was local and often conducted in barter, and European coinage was highly valued yet limited in circulation. Franklin witnessed firsthand the challenges of exchanging goods without standardized money and the uncertainties of colonial credit. Merchants often had to extend loans or offer goods on trust, and mismanagement could ruin a business overnight. Young Franklin observed these dynamics with keen attention, noting how discipline, honesty, and careful planning distinguished successful tradesmen from those who failed. He understood that money was not merely a medium of exchange, but a tool that required wisdom, foresight, and ethical management. Even as a teenager, Franklin showed remarkable ingenuity. At the age of 16, he left Boston for Philadelphia, seeking independence and opportunity. The journey itself symbolized his belief in self-reliance, a trait central to both his personal life and his economic philosophy. In Philadelphia, he secured a position in another printing shop, gradually gaining trust and responsibility. Franklin's exposure to the bustling colonial city expanded his understanding of commerce, networking, and the role of reputation in financial dealings. He learned that success was often less about the quantity of resources one possessed, and more about how one applied them intelligently and ethically. Franklin's natural curiosity led him beyond printing and trade into experiments in science, mathematics, and civic planning. While these pursuits might seem unrelated to finance, they shaped his approach to economic reasoning. Observing cause and effect, testing hypotheses, and measuring results became integral to his philosophy of wealth. Franklin approached financial matters in the same methodical way he approached electricity or meteorology, with observation, careful planning, and a long-term perspective. This analytical mindset distinguished him from many of his contemporaries and allowed him to see patterns in human behavior and economic systems that others overlooked. In his 20s, Franklin began writing essays under the pseudonym Silence Dogood for his brother's newspaper. These writings, witty and insightful, reflected not only moral guidance but practical advice on personal conduct, frugality, and industry. They resonated with a public grappling with limited resources and the demands of colonial life. Franklin's ability to convey complex ideas in accessible language allowed him to reach a wide audience, instilling in readers a sense of responsibility for their own economic well-being. This early engagement with public writing was more than a literary exercise. It was a platform through which Franklin began shaping the economic attitudes of ordinary Americans. During these formative years, Franklin also became intimately familiar with the mechanics of saving, lending, and investment. He experimented with small-scale ventures, understanding the risks and rewards of entrepreneurship. Whether selling books, printing almanacs, or engaging in modest trade, Franklin observed that consistent effort, careful calculation, and frugality produced tangible results over time. He learned to differentiate between necessary expenses and wasteful indulgences, an understanding that would later underpin the maxims of the way to wealth. Franklin's own financial experiments became living examples of the principles he would eventually articulate to guide others. The colonial economy was not without its perils. Inflation, inconsistent currency, and political uncertainty threatened businesses and personal fortunes alike. Franklin noted how some colonists squandered opportunities through impatience, speculation, or moral laxity, while others thrived through discipline and prudence. These observations reinforced his belief that financial success was largely a product of personal virtue, industry, honesty, and foresight, rather than mere luck or inheritance. Franklin's emphasis on character as a foundation for wealth would become a recurring theme throughout his life and writings. Franklin's engagement with civic affairs further deepened his understanding of finance. He helped establish public institutions such as libraries, fire brigades, and educational societies, often using innovative funding mechanisms. He experimented with lotteries and subscription models to finance public projects, learning firsthand how collective investment and organized financial planning could benefit society. These experiences reinforced the idea that finance was not only a personal concern, but a tool for societal improvement. Franklin saw that wealth, when managed wisely, could create public good as well as private security, linking moral responsibility with economic activity in a way that few of his contemporaries had articulated. By the time Franklin was in his 30s, he had accumulated not only material comfort, but a profound understanding of the principles underlying economic life. He had observed the interplay of labor, capital, credit, and ethics, and had experimented with personal systems of saving and investment. These formative decades shaped his belief that financial acumen was accessible to anyone willing to cultivate discipline, prudence, and intelligence. Franklin's reflections crystallized into advice that combined practical experience with ethical philosophy, forming the foundation for his most famous economic work, The Way to Wealth. The context of colonial America, with its limited currency, barter systems, and fledgling markets, was critical in shaping Franklin's perspective. He recognized that money was not simply a commodity, but a reflection of trust, reputation, and societal structure. In a world where paper money was often treated with suspicion, and credit was a delicate instrument, Franklin's insights into thrift, industry, and prudent risk-taking provided practical guidance for navigating uncertainty. He saw that economic success required not only knowledge and skill, but a character capable of consistent, disciplined action. Through these early experiences, Franklin became what many consider America's first practical economist. His writings and personal experiments bridged the gap between moral philosophy and economic science, demonstrating that principles such as frugality, hard work, and strategic planning were not abstract virtues but concrete tools for wealth creation. Franklin's vision was revolutionary not because it introduced new financial instruments, but because it framed wealth as an attainable goal for the average person, grounded in personal virtue and rational action. The lessons Franklin absorbed in Boston and Philadelphia, the careful observation of human behavior, the experimentation with trade and finance, the integration of ethical conduct with practical success, would form the narrative backbone of The Way to Wealth. In this seminal work, he distilled decades of lived experience into a coherent guide that spoke to both the economic realities of colonial America and universal principles of financial prudence. Franklin's early life demonstrates that financial wisdom is not merely inherited or discovered in theory. It is forged in the crucible of experience, trial, and reflective observation. By the mid-1750s, Benjamin Franklin had already established himself as a prominent printer, writer, and civic leader in Philadelphia, but it was his accumulated wisdom in matters of personal finance and practical morality that culminated in the publication of The Way to Wealth in 1758. Originally a preface to his annual Poor Richard's Almanac, the pamphlet distilled decades of Franklin's experience and observation into a series of maxims designed to guide ordinary Americans toward prosperity. Unlike purely theoretical works on economics, Franklin's advice was concrete, approachable, and deeply rooted in the realities of colonial life. Each aphorism carried the weight of lived experience, reflecting not just the mechanics of wealth, but the character and habits required to achieve it. Franklin's core philosophy revolved around three central principles: industry, frugality, and prudence. He believed that wealth was not a product of luck or inheritance, but of consistent, disciplined action over time. The very first of his famous adages, "Early to bed and early to rise, makes a man healthy, wealthy, and wise," embodies this ethos. Franklin observed that industrious individuals who applied their time effectively and avoided idleness were far more likely to prosper than those who wasted their energies in frivolity. In the colonial economy, where opportunities were plentiful but resources scarce, such discipline was not merely virtuous but essential for survival and advancement. Franklin's emphasis on personal responsibility framed wealth as the outcome of deliberate choices rather than chance or social privilege. Frugality, another pillar of Franklin's thought, was not simply about limiting expenditure, but about valuing resources and making thoughtful decisions. Franklin's writings are filled with advice on avoiding waste, investing in quality, and distinguishing between necessary and superfluous expenses. He urged his readers to beware of little expenses. A small leak will sink a great ship, illustrating the compounding effect of minor financial decisions over time. In colonial America, where goods were limited and markets unpredictable, prudent management of resources could make the difference between stability and ruin. Franklin's guidance was practical. He encouraged careful budgeting, delayed gratification, and the reinvestment of savings, lessons that would resonate with generations of Americans navigating the uncertainties of economic life. Industry and frugality alone, however, were insufficient without the guiding hand of prudence. Franklin stressed the importance of foresight, planning, and strategic thinking in all financial matters. He cautioned against excessive speculation and impulsive investments, urging his readers to weigh risks carefully and consider long-term consequences. For Franklin, prudence extended beyond money to include the use of time, the choice of companions, and the cultivation of habits that supported both personal and financial growth. In many ways, his approach anticipated modern principles of financial literacy, budgeting, risk management, and investment planning, all grounded in ethical and rational decision-making. Franklin's The Way to Wealth also emphasizes the relationship between character and fortune. Honesty, integrity, and reliability were not merely moral virtues in his eyes. They were practical tools for building trust and facilitating commerce. In a world where barter and personal credit were common, reputation often determined access to loans, contracts, and opportunities. Franklin observed that those who acted deceitfully or squandered trust found themselves economically marginalized, while those who cultivated honesty and diligence prospered. His stories of successful merchants, craftsmen, and laborers illustrate the tangible benefits of moral conduct, linking ethics directly to financial outcomes. The pamphlet's narrative voice, that of the fictional Poor Richard, added both charm and clarity to Franklin's teachings. Through humor, anecdote, and plain-spoken advice, Franklin conveyed complex ideas in a way that was accessible to a broad audience. He illustrated each maxim with practical examples. The farmer who thrived by avoiding unnecessary debt, the shopkeeper who prospered through careful bookkeeping, or the artisan who advanced through consistent effort and skill development. These stories reinforced the applicability of his principles across social classes and occupations, demonstrating that financial wisdom was attainable for anyone willing to embrace the habits he advocated. Credit and debt management, central themes in The Way to Wealth, reflected Franklin's deep understanding of colonial economics. He warned against over-reliance on borrowed money and urged careful negotiation of terms, emphasizing that debt could easily enslave an individual's future income if not handled prudently. Franklin's advice often revolved around the delicate balance between leveraging resources for growth and avoiding the pitfalls of overextension. In a period when banking systems were rudimentary and credit was extended largely on personal trust, Franklin's guidance was not merely theoretical, but immediately practical. He taught that financial security depended as much on wise borrowing as on diligent saving. Investment, in Franklin's view, was inseparable from education and skill development. He encouraged readers to cultivate talents, improve productivity, and innovate in trade or craft, linking human capital directly to economic returns. Franklin's own ventures, printing, almanac publishing, and civic initiatives, demonstrated the multiplier effect of combining skill, effort, and resource management. By investing in oneself and one's community, Franklin argued, an individual could generate wealth in ways that went beyond mere accumulation of money. This perspective aligned with his broader vision of an interconnected, morally responsible economy where individual prosperity supported collective well-being. Franklin's principles also extended to time management, highlighting the economic value of every hour. He famously warned against procrastination, noting that idleness wasted not only time but potential wealth. In the colonial setting, where labor was a primary resource and markets operated on seasonal cycles, efficient use of time translated directly into economic advantage. Franklin's admonitions against sloth and his advocacy for structured, purposeful effort reinforced the idea that wealth was a cumulative outcome of consistent daily habits rather than sudden windfalls. In addition to personal finance, Franklin addressed broader social and civic implications of economic behavior. He viewed responsible financial conduct as a foundation for community stability and prosperity. By saving, investing wisely, and contributing to civic projects, individuals strengthened the economic fabric of their towns and colonies. Franklin himself exemplified this principle through public initiatives. Libraries, fire brigades, and educational societies were often funded through lotteries or subscription schemes he organized, demonstrating that financial wisdom could serve both private and public interests. His approach prefigured modern concepts of social entrepreneurship and community-focused economic planning. Franklin's aphorisms, though often brief, carried layers of meaning. Phrases such as "a penny saved is a penny earned," or "God helps them that help themselves" distilled complex economic principles into memorable, actionable guidance. These sayings encapsulated the interplay of morality, prudence, and industry, emphasizing that wealth creation was a disciplined, ethical endeavor. Franklin's ability to communicate these lessons with brevity and wit ensured their enduring influence, not only in his own era, but for generations of Americans seeking practical guidance in financial matters. Finally, The Way to Wealth reflected Franklin's understanding of human psychology. He recognized that fear, laziness, and impatience often undermined financial goals. By blending moral instruction with practical advice, he appealed to both reason and sentiment, encouraging readers to cultivate habits that reinforce self-discipline and long-term thinking. Franklin's approach acknowledged that human behavior, not just external conditions, determined economic outcomes. He presented wealth not as a distant abstraction, but as the natural reward of deliberate, virtuous action, a perspective that resonates as strongly today as it did in the 18th century. Through The Way to Wealth, Franklin offered a comprehensive framework for understanding money, work, and personal responsibility. His principles, industry, frugality, prudence, integrity, and investment in self, were grounded in the realities of colonial America, but remained timeless in their applicability. Franklin's synthesis of moral and practical guidance demonstrated that financial success was not merely a matter of income, but of character, habits, and disciplined action. For early Americans navigating the uncertainties of trade, currency, and social mobility, his advice provided both a roadmap and inspiration. As Benjamin Franklin grew older, the lessons he had learned in his youth and codified in The Way to Wealth began to extend far beyond personal finance. His insights into thrift, industry, prudence, and moral conduct were not merely for individual prosperity. They became guiding principles for the burgeoning American society. Franklin's practical wisdom shaped the civic and economic structures of the colonies and, ultimately, the emerging United States. He understood that wealth, when wisely managed, could serve both private ambitions and public good, a duality that would define his legacy as the first American economist. Franklin's influence extended into public institutions that shaped the economy. He helped establish the first American lending libraries, fire brigades, and educational societies, demonstrating that structured civic organization could be funded and sustained through innovative financial mechanisms. His use of lotteries, subscription models, and cooperative funding not only provided practical solutions to communal problems, but also introduced Americans to concepts of shared economic responsibility and investment. These initiatives showed that Franklin's economic philosophy was deeply intertwined with social progress. Wealth, disciplined management, and community engagement were inseparable in his vision of a prosperous society. Beyond civic projects, Franklin contributed to early American financial systems directly. He advocated for banks, savings institutions, and public credit mechanisms that allowed ordinary citizens to engage in commerce and trade. While European economies had long benefited from structured banking, Franklin recognized the need for financial institutions adapted to the realities of colonial America. His experiments and advice encouraged the development of systems that facilitated trade, stabilized currency, and promoted economic growth. In this way, Franklin helped lay the groundwork for modern American finance, showing that careful planning and innovation in economic institutions could empower individuals and communities alike. Franklin's economic thought also influenced American policy, and the nation's early financial architecture. Figures such as Alexander Hamilton and other founding fathers drew upon the principles Franklin espoused: prudence, investment in human capital, and the moral dimensions of wealth, in shaping the treasury, national banking systems, and fiscal policy. Franklin's writings and practices demonstrated that economic stability depended not only on regulation and currency, but on cultivating a citizenry capable of disciplined, ethical participation in commerce. His insights bridged the gap between personal finance and national economic planning, revealing the interconnectedness of individual and collective prosperity. The enduring appeal of Franklin's The Way to Wealth lies in its universality. Though written for colonial Americans, its principles are timeless. Modern readers continue to find relevance in his advice on budgeting, time management, investment in education and skill, and ethical conduct in financial dealings. Franklin's emphasis on consistent effort, careful planning, and character development transcends the historical context, offering lessons that resonate in contemporary personal finance, entrepreneurship, and economic planning. His work serves as a reminder that wealth is both a practical and moral pursuit, achievable through deliberate, disciplined action. Franklin's philosophy also anticipated concepts now central to economic literacy. His focus on compounded effort, long-term planning, risk management, and investment in oneself parallels modern principles of financial planning and wealth management. He understood that small, consistent actions, whether saving a penny, improving a skill, or carefully tracking expenses, accumulated over time to produce significant results. In a sense, Franklin was a pioneer of behavioral economics, recognizing that habits, psychology, and character profoundly influenced financial outcomes. Moreover, Franklin's legacy as the first American economist was inseparable from his identity as a civic innovator. He demonstrated that financial wisdom was not merely personal, but a tool for societal progress. By modeling ethical entrepreneurship, fostering public institutions, and promoting education and literacy, Franklin created a culture in which economic opportunity could flourish. His life illustrates the idea that financial success and social responsibility are mutually reinforcing, a concept that continues to influence economic thought and policy today. Even in contemporary America, Franklin's teachings echo in the ethos of self-reliance, prudence, and community-minded financial practice. Entrepreneurs, educators, and financial advisors alike continue to draw inspiration from his maxims, recognizing the timeless relevance of his insights. Franklin showed that economic wisdom is not reserved for the wealthy or highly educated, but is accessible to anyone willing to cultivate discipline, moral integrity, and strategic thinking. His example bridges centuries, connecting the challenges and opportunities of 18th century America with the realities of today's economic landscape. In reflecting on Franklin's life and work, it becomes clear that his contribution to finance was as much about character and ethics as it was about money. He demonstrated that prosperity is not merely a measure of accumulation, but of how resources, time, and effort are directed toward meaningful ends. By intertwining moral philosophy with practical instruction, Franklin established a uniquely American approach to economics, one grounded in the belief that individual virtue and societal welfare are inseparable. The Way to Wealth is, therefore, not just a guide to personal finance, but a blueprint for cultivating a society in which prudence, diligence, and foresight produce both personal and collective prosperity. Ultimately, Benjamin Franklin's legacy as the first American economist lies in his ability to merge observation, experimentation, and ethical reflection into enduring guidance on wealth. His principles continue to inform not only how individuals manage money, but also how societies approach economic organization, financial education, and civic responsibility. Franklin's genius was not in discovering a single financial formula, but in revealing that the path to wealth is fundamentally human. It requires intelligence, diligence, prudence, and integrity. Through his life and writings, he demonstrated that economic wisdom is an art as much as a science, and that the pursuit of wealth is most meaningful when aligned with moral purpose and the common good. Even centuries after his death, Franklin's aphorisms resonate with clarity and practicality. His insistence on industry, frugality, prudence, and ethical conduct remains a guidepost for individuals navigating complex financial landscapes. His vision of wealth as the product of character, consistent effort, and rational action continues to inspire generations, reminding us that true prosperity is the result of disciplined habit, informed decision-making, and a commitment to both personal and societal well-being. Benjamin Franklin, Through the Way to Wealth, leaves a legacy that is not only historical but profoundly relevant, bridging the gap between 18th century colonial America and the enduring pursuit of economic wisdom today.